So in preparation for this, I flew here 15 hours and 46 minutes. Very interesting flight from Emirates. Very character building, candidly speaking. First flight to Dubai in 6 years from San Francisco, but well worth it. And a great evening last night. Spent quite a bit of time talking to a lot of founders before in the last couple of months and talking about kind of what the topic should be. I was going to go and present you with lots of charts, and then I thought that's just really boring. Because actually what founders and probably investors need to think about is what does the year ahead look like and what's the craziness that goes with it. Okay, so before that, let's just get the elephant out of the room and some of the core questions that you have top of mind. Number one is, did I bring the weather with me from San Francisco? Funny enough, 4 days in the year that it rains in Dubai, and 2 of them are the day that I came in. Number two, is it a perfect weather for a sweater vest? I don't want to make this up, but it's actually pretty good if you think about it. I mean, all around concluded. Question number 3, did I get mistaken for valet parking at the Burj Al Arab rest? That is sometimes, that has actually happened. It's unfortunate. Was I tempted in driving a gold Porsche? I mean, I think anyone would be, candidly speaking. So it's very humbling to be in Dubai, but it's also very humbling to be asked to present here. So a little bit of background on myself. I'm just a little boy from Karachi trying to make it in the world, and I will continue to basically do that. I think one of the things that defines us as people of Pakistani descent and origin is that we have fortitude, and it's something I want to talk about in a little bit. I've got some time for questions. I'm happy to basically do that. I appreciate your time and attention. I want to focus the next 20 minutes on one topic, which is business building, company building in 2023. What does the year ahead look like? Why do I want to do that? Well, the last couple of years have been kind of interesting, kind of fun for a lot of people, including VCs like myself, operators and founders. More headlines than ever before. Everybody wanted to be in a startup. Everybody wanted to invest in venture. Valuations were going through the roof. And then March 22 happened, and people were like, oh my God, it's disaster zone. And so all the conversations I've had over the last couple of months has always been about, oh, what does this year look like? I feel people are exhausted. So I'm going to focus on 7 things. If you are a founder, if you're a VC, how you think about company building. Early on in my career, I got some feedback. And someone told me, they said, Yousuf, you're just not very smart. And I'll be honest, I was kind of hurt. And I said, well, why did you say that? And they said, well, you know, you really need to do your homework, bacha. And I honestly, my mother, I don't know why she talks to me this way, but it's pretty common. I've done my research. And so I was at AWS reInvent. I've spoken to investors in the Middle East and Pakistan, as well as the US and the UK. I've spoken to a bunch of founders, companies that I advised. So I was a chief information officer of several companies, companies like Pure Storage, which I joined when there were about 400 or 500 employees. I left when there were 4,000 employees, helped the company get to $1 billion in annual revenue, went through an IPO. Other companies I was an early customer of, like Slack. Other companies I was an advisor with, companies like Zoom, which all of you have used. In 2015, that company had a handful of customers in the enterprise, including myself, and I can guarantee it to you, no chief information officer said, I can't wait to put a new video conferencing system. That was not the objective. But there's stories to be told with companies like Zoom, companies like Snowflake, companies like Slack and others, and so my data points basically point to this kind of thing. So if you think about building a business for the time ahead, I think there are 7 things that each founder and everybody needs to think about. First and foremost is, at the most early stages of a company, and I've sat on a number of boards, I've spoken to a number of founders, ultimately, it's an investment in the team. And a lot of founders, unfortunately, focus too much on the idea and the product. If you want to execute, it's really about the team that you've been able to put together. So my first big piece of advice and the big action is, for companies that are currently in motion at the moment or you're thinking of forming, you've really got to be able to think about your existing team. You have to have self-awareness that requires you to think about the gaps in the team. Third, you've got to think about the team you need in the time ahead. this has been one of the biggest issues that sort of comes into about. It sounds so basic, but it sounds so obvious, but it's astonishing when you start to speak to founders and you say, well, you know, this is a big market, and we're going to go off to get 1% of this, et cetera. And then you think about, do you know how getting 1% of a market, what that entails? Well, we'll do this and do that. And they've got no expertise in specific types of marketing that will basically move the needle. They don't have specific expertise in product. And I think the other thing is, in 2023, there has to be a much bigger focus on the team. Questions that founders need to ask themselves is, how do we succeed together? How do we make decisions? How do we disagree? Just fundamental things. I've been in venture coming up to 3 years. No shortage of stories where co-founder left, you see some LinkedIn updates, you know, I meet 1,000 companies a year, and ultimately it comes down to the fact that that was the wrong team for the business. No question. You have to be able to spend much more time solidifying your team and identifying the gaps, because investors will see that right up front. Let's give an example. Think about, let's assume you have no budget and no resource issues. Do you think you can hire the right people tomorrow? No way. Because talent acquisition is actually really, really hard. You can have the greatest idea in the world. It exists in your vacuum and in your prism, the way you look at the world. Nobody else cares. So think about how you're able to form a team and how you're able to articulate that this is the best team for this type of business. A lot of people forgot that. Let me give you some examples. When the company goes into a bit of a downturn, if you don't have the right VP of sales, who's basically been, say, a player coach, they don't know how to be able to sell. They don't know how to go down and be able to say, okay, well, I need to cull a whole bunch of my organization, and then I need to go after the pipeline. If they haven't done that for 10, 15 years, they're not the right person that you've basically hired. So focusing on team, identifying it, articulating it, and building a pipeline around it is very, very important. That's number one. Number two is pipeline. Sounds weird. I know it's an obvious thing because of the region I'm in right now. But when you think about startups and when you think about early stage companies, think about pipeline in a strategic way. So think about pipeline from a much more wider angles. A pipeline of customers. So I invest in B2B companies, and our focus is to think about going into SMB or enterprises. Most people in this stage, now the question is, well, we've run out of revenue, it's been really difficult, etc. Your objective is twofold. One is to be able to build a pipeline of prospective customers. It sounds really hard, it actually isn't. Remember, I'm not telling you you need to close customers. But if you're going to be raising funding, you need to be able to demonstrate a couple of things by building a pipeline. Number one is that you've been able to identify customers. Number two, that you've been able to get validation of the problem. And number three, that you know what you're going to be able to target when the market turns around. A lot of people, unfortunately, will basically do the opposite. They'll be like, uh-oh, real problem, I shouldn't be expanding, I shouldn't be selling more, etc. The true founders are the ones who go after the business. So I'll give you plenty of examples. Frank Slootman, who is the CEO of Snowflake, he was on the board of Pure Storage. Prior to that, he was the CEO of ServiceNow, which is a $50 billion enterprise software company. Now, in 2012, 2013, I guarantee it to you that no CIO and no enterprise company was saying, I need a new help desk system for IT. It doesn't exist. BMC software, crowded market, not a high priority, not required. What did Frank Slootman do? Well, Frank Slootman said, you know, IT organizations are changing. They basically are focusing towards much more cloud software. BMC have got a relatively good product, but we need to go after it. His objective was to be able to basically understand his biggest competitor's install base and be able to penetrate that. POCs, free POCs, pilots, pipeline conversations, interaction, coverage. And as the renewal for some of these existing contracts started to come into place, ServiceNow was able to basically execute and sort of bring that into equation. It is now a $50 billion company. Again, most startups get into the motion of saying, ours is a great product and it may not be a priority. Guess what? Every single company, nothing is a priority unless it's your personal life. It just isn't, including digital health products, okay? The human emotion and priority matrix is very different for everybody. It's your objective to be able to educate the market and be able to build a pipeline for your business. Why do you need to do that? Well, when you go to investors, when you build a pipeline, it sends a signal about the type of team that you are and how you're thinking about the business. Remember, is it a great product? Is it a great company? Is it a great investable idea? Investors, asset allocators like myself, company builders like myself, our objective is to help build companies which will give great returns to our investors. We've been around for 15 years, so we just raised our 5th fund. It's gone super well. We had companies like Discord we were early investors in. Braze went public at 7.8 billion. Companies like Fastly went public. So all of those companies we saw very early on. They all were in crowded markets. And I spoke to the founders and I actually understood, looked at their history. If you work in a crowded market, the question is, how do you move the needle? So the third thing you need to think about is exceptional customer experience. It has to be exceptional. So the third thing that every company needs to do in 2023 is to make sure that their customers are wildly successful. I'm saying some heavy words here because I want it to be memorable enough and palatable in a tweet. But the reality is that most people don't think about customer from a success standpoint. Right? They think about, well, I'm going to deploy, I'm going to get an invoice, and then I'm going to look for a renewal, and then I'm going to go for a new customer, and that's going to work well. And then I'm going to put that in my slide deck, and I'm going to go speak to Yousuf and Misbah and Faisal and a bunch of others and say, look, I've got all these customers. And then, you know, when we think about investing in companies, we're like, interesting, I'd like to speak some customer references, you know. And I'll be honest with you, they're going to tell me a bunch of stuff they're not going to tell you. It's a fact, right? And it's always, sometimes, I said this in the past, sometimes it's not what they say, it's what they don't say, right? And this is the missing piece. If you make a customer wildly successful, I guarantee it to you, they'll back you, and then some. So the customer success motion has to radically change, both in consumer as well as in enterprise or B2B. So a company called Superhuman, which has been a productivity tool and a unicorn and all the other stuff, the reason that they've done super well is they built a phenomenal solution on email, but they also built out kind of a customer success motion for consumer. It's ridiculous. It's very, 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 very impactful. So every founder, every CEO of a company, I don't care whether it's seed, series A, pre-seed or whatever, you've got to ask yourself how you make your customers wildly successful. And that requires showing up. That requires hearing what you're doing well and what you're not doing well, thinking about how you're able to engage them. And now I'm going to hear the common objections. Well, you know, we don't have access to power in terms of who the people are buying it, and some people are super difficult, etc. It doesn't matter. The true founders are the ones who are able to navigate customer success. Think about what people care about, and sometimes you actually have to ask yourself, what does this customer care about? What moves the needle for this individual? Whether it's a consumer or whether it's an enterprise. And people forgot that in 2023, if I'm perfectly candid. The reality was that a lot of companies raised at an inflated valuation, were not justified, be brutally honest about that. They hired a lot of people to sell their product. The market had a bit of a downturn, and then they were like, uh-oh, how do I grow into this valuation? I don't want to go for a down round. I need to fire a bunch of people, and they forgot about their customers. The reason that a company goes to a down round is not because you've reduced in valuation, it's because your customer is also leaving you. It's a clear signal of it. So thinking about making customers wildly successful, retention, and by the way, this is not about, oh, by the way, I need to increase my ACV, etc. I'll talk about that in just a little bit. This is about making sure that you show customer love. You want to see an example of that? Eric Yuan. Eric Yuan, so my Zoom story is that in 2015, I became CIO of Pure Storage. We were growing at a pretty rapid rate, hiring 40 people a month. We were 400 people when I joined. We had about 5 different conferencing systems. WebEx, Yammer, Skype, Teams, Google Hangout, video, etc. So, weird guy and, weird name, weird accent shows up in Mountain View in California and says, this doesn't work. Something doesn't make sense here. And apparently, I was the crazy guy, believe it or not. So I said, I think we should have a single system we should put into place. I'd spent 10 years deploying out video conferencing in other companies in the past. I'd looked at the geographical issues and the technology issues. I tested out Zoom, and I decided to basically go with Zoom and be able to deploy that out. So I did a very quick POC. For me, it was an easy decision. There were a handful of other customers in the market. I became one of the first 10 customers of the conference room product. And then I worked very closely with the Zoom team by giving them lots of feedback on features and others. Eric Yuan, as an exceptional human being, reached out to me and emailed me and said, look, I really appreciate your business, would love to try and connect with you, etc. After a year of continuing to talk to him, not only was he very reactive to pretty much every issue that we basically had, he was very open to feedback, and he was very generous in being able to offer me to become an advisor to the company, which of course changed my life and then some. But one of the things that he was able to do, even if you look on Twitter now or otherwise, every time you mention a Zoom issue, he's going to respond to it. Cares about it deeply. The best CEOs are the ones who actually understand their customers. And by the way, you should ask yourselves, if you are a founder, like if you're an investor and you talk to the company, you're like, give me a customer story. When I do a pitch, so I speak to about 1,500 companies a year, one of the questions I typically ask is, hey, give me a customer story. And sometimes I'm just looking for people to be able to articulate that. And when they say, well, we did this, and let me speak to this person, you're like, so you got 10 customers, and you can't basically point this out. Sounds like a kind of an unfair advantage, but I don't think so. I actually think at this stage, you should be basically really actually understanding the customer footprint, the impact, or otherwise. And people forget that. So you have to show a level of kind of love and success and joint partnership with your customers in a way that you will, others will not. And you need that in 2023. This year, it's kind of critical for that. On the consumer side, even more so. Experiences are very unforgiving. And people have forgotten about customer experiences. The world has kind of moved on very quickly, right? Back in the day, we're like, well, it's difficult to get a cab. And now we're like, why is it taking 3 minutes? I don't understand. It should be taking 1 minute, right? And you're like complaining about it. It's maddening. Okay? Number 4, think about product in a very strategic way. So you've got to think about product depth. This is not about product vision and product runway. Those are all good things to do. But in 2022, that was the promise. In 2023, the bar is very difficult, very different. You've got to have a level of depth of understanding your product in a way that other people do not, and that is going to be your advantage. I was speaking to a founder yesterday. They were saying they were building a solution to be, looking at connecting employers with talent, etc. And I told them right off the bat, I said, you've got to build a data advantage. So the depth in the product offering has to be absolutely key. For example, if you're an accounting and software automation solution, the way you should be thinking about that is to be able to actually think about how you've been able to impact the customer through every single use case, as an example. If you're on the customer side, being able to say, I actually understand the advantage, and I have a footprint of the customer because of my data advantage that I have, you've got to think about product depth. And a lot of people forgot that. They thought about features and thought about integration and APIs, and then we'll do this alliance thing, and then we'll focus on this thing. And I was like, okay, does it work? Like, if I bought you 10 customers tomorrow, could they deploy a product? Well, we're looking at a 3 to 6 months, employment. I'm like, okay, that's like a professional services thing right now. And I totally get it. It's a little bit unfair, but you have got to be able to think about how you're able to look at frictionless deployment and customer experience in a way that people don't. So you've got to build out product depth. Last couple of things. So, actually, I've got just enough time. Okay, fortitude. This is very important. Before I talk about fortitude, just think about purpose. So, it's funny enough, getting on the flight from San Francisco, Emirates is great, isn't it? It's just fantastic. I love that airline. American Airlines, no offense, terrible. You get in and you're able to access the entertainment system right off the bat. And so, of course, you put on the headphones and, I was going to go on to a documentary. Okay, I was going to go on to see Friends, but that's okay. I was trying to look intelligent. And Mudassir Sheikha from Kareem is being interviewed. And all of a sudden, I'm like listening to him, and he said this thing that was super, super impactful to me, and I thought it was really important. If you think about the history of Kareem and how that was successful, it was a lot about, he said, building a company of purpose. A lot of us forgot that in 2022. We're focusing on valuations and term sheets, focused on technology stacks and, you know, can we get a growth round, whatever. And we forgot about the purpose. True companies, long-lasting companies, they're companies focused on purpose. If you read about the history of Kareem, whether it's good marketing or otherwise, I was like, that's impressive. Like, I'm gonna talk about that. And then I saw him last night. I was like, I love you. I'm a big fan. So, but it talked about the fact that, you know, his co-founder Magnus had a major issue, a major health scare, and he really wanted to basically woke up and said, you know, kind of early 30s, like, I want to build a company of purpose. You know, Mudassir was at that stage. I did that myself in terms of my personal career. Society has changed quite a bit over the last few years. That's the one thing we have to realize, is that ultimately, you know, I woke up after 5 CIO gigs. I've been advised to multiple public companies, etc. And whilst I've had a very good life, alhamdulillah, I've been very grateful for what's like, you know, there's a level of fulfillment and purpose that's sometimes missing for whatever it is. Maybe COVID helped in that perspective. We're all human beings. It's totally fine. I'm happy to basically talk about that. But the reality is that you've got to go for the win. And so a lot of companies have forgot, in my viewpoint, what their purpose is. And so building a company of purpose is kind of important. Now people say, well, yeah, that's good. We have that internal, we have some culture, and we have some values. You know, it's more than that. Investors need to see that. Companies are built over a long term. So my last point that you need to think about is fortitude. Forthrightness, strength, and resilience. And it's not, you know, it happens to be that, you know, if you're a Pakistani who's kind of grown up all over the world, but gone back and visited your family in Karachi when there's power cuts and no water, you know, you build character. It's a bit of character building experience being Pakistani, I think, candidly speaking. And I think fortitude and forthrightness and resilience seems to be kind of in our DNA. So I think we've got an unfair advantage, candidly speaking, for a lot of Pakistanis in the house. So I think the true companies are the ones in 2023 who need to be able to think about fortitude, who need to be able to think about, look, the best founders, honestly, and I've looked at this data across the board, there are a couple of key common dynamics that, you know, I spoke to hundreds of them over the course at an AWS conference last year otherwise. Their ability to be able to drive through walls, you know, this is the best way for me to explain it. All of you have dreams in some way, shape, or form. Our dreams are intangible, right? Can't touch them, but we don't stop dreaming, correct? Our fears are also intangible. Why should we let them stop us? Doesn't make common sense for me. So ultimately, people say to you, hey, you just joined this early stage firm, you know, like you could have built these other, be part of these other firms, or you could have done this. Completely irrelevant. I needed to tell myself that I wanted to be able to build a good enterprise class B2B enterprise investing firm to give stellar returns for my investors and to build market-leading companies that I happen to be customer and I've advised in the past when they were next to nothing in terms of customers. I had to do that for myself. I don't have the wherewithal to be a founder. Actually, the secret is I've been a failed founder of not 1, not 2, but 3 companies. Third time is not a charm, just so we're clear, okay? I tried this. It's very, very hard. So I have no shortage of respect for founders. But the reality is you have got to be able to think about time and be judicious about it and the priorities that go with it in a way that you haven't been able to do before. Now, you may get this idea that I'm thinking about doom and gloom and all of the other things that go with that. I'm not doing that. What I'm trying to explain to you is that the best companies that get invested are the ones where founders are able to demonstrate and show that they have a level of grit, that they have a level of fortitude. This is different because I think a whole bunch of companies got funded last year, with all due respect, had no business building a business around it. They did not have the right team. They had not been through a downturn. They don't understand unhappy customers. They don't understand taking rejections. There's a whole bunch of people who grew up in a bull market, and they're not ready for it. And you've got to be able to have the fortitude for it. The last thing I'll say, the seventh thing, is that you've got to build a strong foundation. Houses that stand the test of time are the ones that are built on good foundations. Doesn't matter about earthquakes or fires or anything else of that sort, but you build a good foundation, you can build a company for the long. And people forgot that. You speak to founders and speak to companies, like, okay, walk me through your financials. Oh, well, I don't have a pipeline, I just need to. And you're like, if you can't control $5 million of money that I'm going to be able to do, I'm kind of worried right now. Tell me about how you've been able to bring these. Now, there's a lot of things. You can cut a whole bunch of corners as a founder, just fake it till you make it, all those other things. That's great. But ultimately, you're building a company. And so building a good operational foundation gets missed. When you can't talk about your numbers and you can't talk about your customers, when you don't have that DNA, it's not going to basically meet the mark. Let me end with this thing. Thank you very much for your time. I appreciate that very, very much. Despite all that you hear, remember, companies, take time to be built up over time, right? There's very, very few companies. I was very lucky to have worked with companies like Pure Storage, which was one of the fastest growing systems company on record. I joined that company in 2015. It was founded in 2009, went public in 2015. It was one of the fastest growing companies on record. Of course, I advise companies like Zoom and others. I've seen those companies go through. Just to give you some context, at the beginning of the pandemic in February of 2020, Zoom was having 10 million daily active users. It went to 300 million in less than a month. It's one of the few companies that the cloud provider said, we're out of capacity. We can't offer that to you. Basically, that was their problem, right? In addition to a bunch of issues. Companies are built over a long time. It's not about successive funding rounds. It's about how you build a company with purpose, having the right team that has it, have the level of product depth, wildly successful customers. And I think we have to get to a degree of core basics, how we think about companies. When you think about fundraising, that is a strategic part of how you need to think about it. Continue to build relationships with investors. I've made myself more than available to a bunch of founders in the past. The updates that you provide, companies are watching and companies are listening and companies are tracking. That's important to be able to, that's the job of the investors, to look at companies, track them, and basically invest them. So if you start to basically hide away from the facts, like I don't want to raise, etc., despite what my mom told me, I'm not completely stupid. I can actually figure stuff out and say, because it takes a few questions to ask, like what happened this month versus this month? Just because you didn't give me an update, just because you didn't put it in the deck, doesn't mean it didn't happen. It happened, right? So it's okay to be real about it. No one's expecting a perfect outcome, but you have to have the resilience to be able to build a company with long-term value. Got some time for questions. Thank you very, very much for making time. I appreciate it. Okay, any questions? Yes.
How would you go about exception handling or objection handling on reservations on Pakistani macroeconomics?
Okay, I'll repeat the question. So the question is, how do you do objection handling about Pakistan macro, right? Because basically that translates into, yeah, nice talk, but you're in Silicon Valley, you don't know what I'm going through. Is that what you're basically saying? Okay, I have time for you. Email me, I will have time for you. Okay, so that's not true. So just to give you some context, I've been talking to founders and companies over the course of last year. I'm an LP in a fund already, so I look at a bunch of deals. We can invest about 10% of our capital outside of the US, and so I'm active in the market. I'm here, I showed up, okay? And so I'm planning a trip to Pakistan, but again, I have a job to do to not just invest because I want to invest in a Pakistani company, but I need to be able to think about my fund and portfolio construction. So the common question that we get into is, well, how do you deal with the Pakistan macro, et cetera? Look, there's a bunch of investors who will never invest in B2B software. That's okay. I'm not offended. I'm totally fine with that. People have an investment thesis. They should be able to figure that out, and that's the strategy that they get from investors. Now the question is, well, the objection is, well, Pakistan macro, et cetera. I think we get hung up on this, and I think if you ever have time, if you don't sleep like I do, go into Google Maps and zoom out. It's really fascinating stuff. You just zoom out, and you'll see the whole world. And then I want you to go into different parts of the world. Just think about what's basically happening there. So let's talk about macros. I'm not going to insult. Some companies, they've got a whole bunch of people taking over the parliaments and the corporate office and the kind of government offices. Don't see that happening in Pakistan anytime soon. Inflation is global. It's a major issue. Now you're going to talk about currency risk. There's a whole bunch of people who are not even using their local currency anymore. That's happening in Latin America, right? So I'm not trying to gloss over it, but what I'm trying to explain to is, like, hey, there's a whole bunch of macro issues in a whole bunch of countries, right? So it's really about what you're able to build in the ecosystem. The reality is that's existed in every country known to time. So I was in the UK for several years, okay? I was a royal subject of Her late Majesty Queen Elizabeth II, long live King Charles, right? And so, but they didn't build a tech ecosystem up until 15 years. So let's look at the data. Highly qualified, highly educated workforce, definitive, well-structured finance system, well-regulated in terms of law and order, etc. Great macroeconomics in general, good brand. Is it the hotbed for technology innovation? Maybe in one space, maybe fintech, but it hasn't been. One, maybe two, maybe three unicorns at best that came out of Europe, the UK. So I'm not trying to gloss over it, but it's important to be able to put that in context. Ultimately, you think about building a company which has revenue, which is investable, which has wildly successful customers. You have to remember, part of the data doesn't make a difference. I spoke to Travis Kalanick once at a conference. I mean, actually a lot shorter than you realize. That felt pretty good. And I asked him, I said, I talked to, everyone's read about the story. But one thing I realized in the conversation, he didn't go back and say, oh, what does the data tell me about taxi cabs that I need to be able to do? It didn't come from that vantage point. Despite what you want to say about Meta and Facebook, Mark Zuckerberg wasn't like, how many social media websites are there should I create with a new network? That wasn't the way things existed, right? So if you are a founder, I mean, the same thing with Amazon, right? Jeff Bezos. I mean, I met him in just 1999. I asked him, what is the best thing about Amazon? And he said, best thing about Amazon, I don't have to explain to people what I do. I sell books on the internet, right? That was a very simplistic aspect of how he did it. And the internet was still very, very early in its stage, but ultimately he didn't look at the data points. He didn't let, knowing that basically Barnes & Noble and Borders were the big behemoths, he didn't let that, those were his macro factors. Think about it. Zoom had the same thing. Competitive industry, competitive state, well-entrenched customers, and not a priority for customers. Snowflake, same thing. So you've got to understand it. It's kind of, the macro piece provides a perspective. It is a data point, but it should not be the data point. And I think that's important. Yeah? Good, sorry, yep.
Cohesive and well-aligned teams are difficult, challenging in Pakistan to get.
Yep.
So in terms of value and skills, it's always a challenge getting that
right.
in Pakistan. So in terms of speed of starting, and I'm talking about founding teams like equity owners,
yeah.
How do you balance the speed of getting started and building the right culture, right founding team on day one?
Okay, so it's one simple answer, chemistry. If you, honestly, founding teams fall apart because there's just no chemistry, right? You have to ask the questions. How do you agree? How do you disagree? What do you want? What's motivating you versus what's motivating? If the first conversation, by the way, is about equity before you've started a company, no offense, that's a red flag, because you ain't got nothing. So the fact that you're basically battling on that perspective, so the best founding teams are the ones who start to figure out what alignment looks like. Life is too short. I have a common thing when I used to manage hundreds of people, and sometimes I, hire through people in my team. I would be hiring a manager who directly reports into me. And I'd ask a question, and we were kind of going back and forth. We'd always have like one or two people who were like, I'm not sure this is the right hire. And I basically then I said, okay, I'll tell you what, have one final conversation with him, but go out for lunch. And they said, what are we going to do? I said, if you can't go out for lunch with the individual, then working with them day in, day out is not going to work, right? So the second thing, by the way, is people have to get into this motion of actually understanding that there is talent available to us globally. And you'd be very surprised about being able to do an outreach, connecting. The best part about what Paklaunch has been able to do is to be able to build out a community. If you're not leveraging that community, that's on you. So being able to reach out to a bunch of founders and say, hey, do you know anyone who's got talent here that I could maybe speak to? Like, don't let things come in the way. What is the worst that's going to happen? Someone's going to say no to you. Oh my God, that's okay. I got told no all the time in my life. Trust me, right? But you have to move on. So you have to if you have to form the right team, sometimes it's your job to be able to say, hey, I'm going to convince this individual. By the way, most founders, they're completely nuts, with respect. Think about it, right? Got like experienced jobs, you've been, have a relatively good lifestyle, especially in the US, and you're giving all of that up to basically be a one-person crew trying to basically build a company from the ground up. For me, I'm not brave enough. Like, kudos to you, I will back you any day of the week. But the reality is, why should that stop you from forming the right team? It should not stop you from doing so. So cohesion, chemistry, I think that's what it comes down to. Shared values, shared goals, that's really, really critical. Okay. We have time for one more question, and then I should really shut up. There's a question back there.
Sorry. Hi, Yousuf. Since you're bringing the Silicon Valley perspective, I think a question that is going to be important today is about down rounds.
Yeah.
So perhaps you could just give us a thought about how Silicon Valley is handling down rounds, since one thing about the Pakistan community is that, and for many of us who have entered the VC industry in the last 10 years or more recently, is that we haven't been through these kind of down rounds.
Yeah.
So how is the Dream Factory over in San Francisco thinking about this concept, since they've been up and through a few cycles?
Oh, we're going gaga. I'm just kidding. No. The reality is, down rounds is a reality of business cycles, irrespective of business cycles. Companies will unfortunately go through down rounds because they have not been successful. So, at least from my perspective, yes, we've seen an increase of them. So one of the things is you've seen an increase in seed extensions and bridge rounds coming into place, and I don't really look at down rounds in a completely negative way. Part of it really comes down to what the time ahead looks like. I'll give you plenty of examples. Figma, which was bought by Adobe for $20 billion, didn't make revenue for the first 4 years. UiPath, I was a CIO of Automation Anywhere, its nemesis and competitor, got to $1 million in ARR after 10 years. Okay? So those are not, on the surface, not really investable ideas. You're like, Eric Yuan from Zoom. Competitive space, first-time founder, was an engineer, he wasn't even a VP, whatever, but he was deeply passionate about building best-in-class software, right? So I think that down rounds are unfortunately a normal part. They seem to be, of course, more extension because I think companies raised at an inflated valuation last year. They used that capital up to be able to hire go-to-market teams, to be able to take to market. They didn't get the return for it, and they started to basically run out of fluid. And the other piece is that I think a bunch of people raised money at valuations they knew they weren't valued at, but they're like, well, I just want to give up 10% of equity so I can value my company at $1 billion. The reality is you've only got $2 or $3 million in ARR. Even that's not true. So sometimes you need a little bit of a reset. That happened in 2000. So that, that was a bludgeon. I was there. I was part of a company which went public. I was a pre-IPO as part of that company. So I think that is a reality, and I think it's a global reality. I don't actually think it's marked to Silicon Valley. It's just a larger data point that I basically have from that. Okay, there's going to be a panel later on. If you haven't fallen asleep, there's really good coffee. Thank you very, very much for reaching out. I look forward to connecting with you in the future. Thank you to Ali and the team.